Well, holy smokes, everyone. The IRS is now warning taxpayers about a new $600 threshold for third-party payment reporting. So I guess the IRS is about to put those new 80,000 agents to work. And people, when I saw this new $600 threshold, I thought this was completely crazy and completely draconian. And this is why they're going to push so hard for this central bank digital currency to come after the little guy, to come after the middle class and the poor. Because unlike the big billionaires that have, a dozen lawyers and a dozen accountants to get away or get through all these tax loopholes, while the middle class don't have access to those resources, so the IRS is now coming for you. So everyone, what is this new threshold? How is it going to work? What does it mean for you? Well, let's not waste any time, everyone. Let's get straight into the news, the facts, and the data. Okay, look at this, everyone. IRS warns taxpayers about new $600 threshold for third-party payment reporting. The IRS on Tuesday shared tips for upcoming tax season, including a reminder about the new $600 threshold for receiving Form 1099-K for third-party payments. The change applies to payments from third-party networks such as Venmo or PayPal for transactions such as part-time work, side jobs, or selling goods, according to the IRS. So to put it in context how big of a change this is, previously the threshold was for something over 200 transactions and worth over $20,000. But in 2021, Congress slashed the limit to $600 and they made something called the American Rescue Plan. It sounds great, all these acts they create. It sounds like they're really doing something good when really they're doing the opposite, people. They're not rescuing America, they're rescuing the government because the government is going bust with $30 trillion in debt. And they're going to start coming for every single penny they can squeeze out of you. But guess what? If the government keeps on spending more than they bring in, it doesn't matter if they tax you 99%, it will never be enough because they're going to keep on spending more and more than they bring in. And what's not quite clear is what happens, for example, if you have a garage sale and you sell a bit of furniture. Well, you've already paid taxes on that furniture. And most people, pretty much everyone, will be selling that furniture at a loss. So why should you have to pay tax on it? Quite funny, someone commented, if my garage sale counts as income, then every single future purchase will be a business expense and everything I own will become inventory subject to depreciation. At this rate, the IRS may owe you money. Well, unfortunately, I don't think it's going to work out like that. But let's keep reading. Aimed at closing the tax gap, a top priority for Biden administration, the provision is estimated to bring in $8.4 billion from the fiscal year of 2021 to 2031, according to the Joint Committee on Taxation. Again, that's just going to be a drop in the bucket compared to the amount of debt they're in, and people, there's no way they can actually possibly pay it back. So they got to get that inflation skyrocketing, they got to get people earning more money when in real terms they're actually earning less, but they'll be earning more money in dollar terms to get that debt paid down. CPAs are warning it's going to be a new form for a lot of people, and the worst thing you can do is ignore it, they say. So okay, who's going to receive this 1099-K form for 2022? Well, companies file Form 1099-K, known as an information return, annually to report credit card and third-party payments, with a copy going to taxpayers and the IRS. Another agent said the business income on your return must include what's reported on the form for 1099-K, otherwise you may trigger an automatic IRS notice or even an audit, he said. And again, they just hired an army of IRS agents. There's going to be even more and more audits this year. They say it's possible you receive a form for 1099-K for transactions you don't expect, such as reselling a Taylor Swift tickets at a profit, for example. But here's where it gets unclear, like I was saying earlier, everyone. But selling items at a loss, such as used furniture, may be less clear. Well, they better clear that up now. Obviously, if you sell a 2,000 couch for 1,000, there's not taxable transactions there, he said. You don't get a capital loss for it, and you don't have a gain. So what do you do if you get this form by mistake? Although the change aims to collect taxes on income, not personal transactions, experts say it's possible some filers may receive the form by mistake. Or maybe it's just the government trying to get more revenue. The challenge with the new lower income threshold amount of $600 for forms of 1099-K is that personal payments and reimbursements could be incorrectly reported as a taxable transaction, he said. So that's right, everyone. If you get a birthday gift from grandma, this may accidentally get flagged by the IRS as a taxable transaction. If, for example, you're struggling and a friend sends you money, they may think that's a taxable transaction. With this new draconian laws, there's just simply going to be a lot of errors and a lot of mistakes, and things are not clear yet. A frequently asked question page from the IRS says you shouldn't receive the form for personal transfers such as reimbursements for splitting meals, gifts, or allowances. However, if you receive the form for personal transactions, the agency says to contact the issuer for a correction. If the company doesn't fix the error, you can attach the explanation to your tax return or reporting your income correctly, the IRS says. So everyone, what this simply means is it's just more and more taxation being put on the poor and the middle class. Why are they not going after the billionaires that have all their tax loopholes to pay, sometimes in many cases, zero tax? It's already so hard to get ahead. Me, I have to pay 45% of my income to the government. It's absolutely outrageous how much they're taking. And they say it's for the roads. Well, I've been driving on the roads lately and there's potholes everywhere. And they say, well, you receive a pension when you're older. Well, maybe by the time I retire, there's not going to be a pension because it's all going to get wiped out during the next financial crisis, like what nearly happened with the UK pension funds. Not to mention with the way inflation is going up, it's not going to be enough to cover the basic essentials. And for those people that think it's the government's divine given right to force you to pay tax, no, people. The US only started paying income tax in the early 1900s. And when they did, it was only 5-10%. And then they just slowly, every single year, increase it little bit by little bit. Another 1% here, 2% there. Then they'll lower a little bit, and then they'll increase it a little bit more. And you better believe when we get into another global conflict, while taxes are going to increase through the roof, it could get back all the way up to 75% like it was during the 1940s. And guess what? In 1944, the tax rate actually hit a peak of 94% for income over $200,000. So if you think it can't get any worse, people, it definitely can. But everyone, what do you think about all of this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.